Let us see the next question. The management of Trux Company Ltd is planning to expand its business and consults you to prepare an estimated working capital statement. The records of the company reveals the following annual information. So annual information is given. Domestic sales is 18 lakhs with 1 month credit. Export sales is for 3 months credit 8 lakh 10,000. Highlight the portion sales price 10% below the domestic price. Consumption of the raw material is given 6 lakh 75,000 and suppliers extend 2 months credit. Leg means time gap in the payment of wages half month. Leg in the payment of the manufacturing expenses 1 month. Leg in the payment of administration expenses 1 month. Selling expenses payable quarterly in advance 1,12,500. Income tax payable in 4 installments, of which one falls in the next financial year 1,68,000. The rate of the gross profit is 20%. Highlight the portion, ignore WIP and depreciation. The company keeps 1 month stock of the raw material and finished goods each and believes in keeping 2,50,000 available to it, including the overdraft limit of rupees 75,000 not yet utilized by the company. Management is also of the opinion to make 10% margin for contingencies on the computed figure. You are required to prepare the estimated working capital statement for the next year. That is the question. I request all of you to go through the question, please. Now, friends, is it an existing company or is it a new company? It is an existing company. Why? Because the question does not provide the information directly or indirectly that it is a new company. So let us answer the question. Calculation of working capital requirement for an existing company. Full stop. Step number 1, calculation of cash cost of sales. I want you to calculate the cash cost of the sales and put your answer in the chat box. So let us start doing answer. Column number 1 is particulars and column number 2 is amount. We start with the direct material consumption. It is an amount of 6,75,000. Next is the direct wages. $5,40,000. At this point of time, we understand that say we can compute the prime cost, but there is no need. So I'm not doing it. Then manufacturing expenses. It is provided as 7,65,000. So I request all of you to use your calculator. 675 plus 540 plus 7,65,000. It comes to 19,80,000. that is given a name as factory cost or works cost. Full stop. It is also given a name as cost of goods produced, and since the opening and closing are same, so this itself is cost of goods sold. That is 19,80,000. Next, administration expenses. It is an amount of rupees 1,80,000. Next is selling expenses, 1,12,500. That is cash cost of sales, 19,80,000 plus 1,80,000 plus 1,12,500. So 22,72,500. This is the way cash cost of the sales is calculated. Next is calculation of step number 2, calculation of working capital requirement. Now friends, except datas, because in datas I need to explain you something. Except datas, try to compute the working capital remaining values on your own. Now friends, over here, the question is providing the information. Raw material holding period is 1 month. Consumption of the raw material has been provided to us. So based on that, say we can compute the stock of raw material. So column number 1 is particulars and column number 2 is amount. So stock of raw material, in that raw material consumption divided by 12 months into raw material holding period. That is what we understand. What is the consumption of the raw material provided to us? 6,75,000 divided by 12 months into raw material holding period is provided to us as 1 month. 675 upon 12, 56250. Next is WIP, but in this question it has been given that say ignore WIP, so 0. So finished goods, it is cost of goods sold divided by 12 months into finished goods holding period. What is cost of goods sold? It is an amount of 19,80,000 divided by 12 months into finished goods holding period is again 1 month, because the company keeps 1 month stock of the raw material and finished goods each. 19,80,000 divided by 12, 1,65,000. Over here in this question, I need to explain you the datas. So I'm not writing anything against datas for the time being. Now the question says that so the company believes in keeping 2,50,000 rupees as the cash balance, including overdraft limit of rupees 75,000, which has not yet utilized by the company. So we understand that so the cash balance, cash and bank, 2,50,000 minus 75,000, 1,75,000. Because the total requirement is 250 and that includes that's the OD which we have not used. So we just have to make the arrangement of only 175 because total we require 250. However, 75,000 we can use anytime. So we understand that it is 175 is only the cash balance that we need to keep. If at all you want to write the cash balance of 250, you can. Then later on you are required to write overdraft 75,000. Next is advance tax. 1,68,000 divided by 4 into 3, because it has been that is provided to us very clearly that say we pay that in 4 installments, of which one falls in the next financial year. It means that say the 3 is in the current financial year. So 1,68,000 into 3 divided by 4, 1,26,000. Next is the prepaid sales promotion expenses. It is annual expenses divided by 12 months into time period. The annual expenses are 1,12,500 divided by 12 into 3, because one quarter is consisting of 3 months. 1,12,500 into 3 divided by 12, so 28125. That is the way prepaid sales promotion expenses. So almost all the current assets are done except the debtors. Next is the creditors for raw material. In that, annual credit purchase divided by 12 months into average payment period. Dear students, the opening and closing are same, so consumption itself is purchase. What is the consumption? 6,75,000, and suppliers extend 2 months credit divided by 12 into 2, 1,12,500. Now we can see that the information is given that the wages are paid half month in a year. Okay, so the outstanding is of half month. Manufacturing expenses 1 month, administration 1 month. So what we can do, we can club manufacturing expenses and administration expenses, and we are required to keep the wages separately. So outstanding wages, it is calculated as annual wages divided by 12 months into average payment period. What is annual wages? Annual wages is an amount of 5,40,000 divided by 12 into zero point 0.5. 22,500. Next is outstanding manufacturing and administration expenses. Outstanding manufacturing and administration expenses. So manufacturing expenses plus administration expenses whole divided by 12 months into average payment period. So what is the amount of the manufacturing expenses? It is an amount of 7,65,000 plus administration expenses are outstanding 1,80,000. Whole divided by 12 into 1 month. That is the way it will be calculated. 78750. That is the outstanding manufacturing and administration expense. Now friends, we already have written over here the advance tax of 1,26,000. So now we will mention over here income tax provision. Income tax provision will be 1,68,000. That is what we understand. If at all you would have written the cash balance of 2,50,000, then right now you would have mentioned bank overdraft of 75,000. So this is the working capital requirement before margin. Add margin for contingencies, and with that we'll find the final answer. Total working capital requirement. That is the way we are required to calculate the answer. Now let us understand how to make the calculation of the debtors. Honestly friends, in this question I don't think that there is anything new than the debtors valuation. What I want to tell you is that in your final revision you just be careful that you are focusing on this kind of important points. So write down heading valuation of debtors. Now let us see how to do valuation of the debtors. Dear students, the question is providing the information that whatever the sales that we have is divided into two parts. One is the domestic sales and another is export sales. Second important point is that both of them are having different credit period. One is 1 month, another is 3 months. Third, the sales price for the domestic business is 10% the below domestic price. Like that information is given. So we understand like this. Listen carefully what I am going to speak. Sales. In that domestic and export value. For the domestic sales, the sales value is 18 lakhs. For the export, it is 9 lakhs. How this 9 lakhs is calculated? It is 8 lakh 10,000 divided by 1 minus 0.10. In a way that say, whatever the goods that we normally sell for 100 rupees in domestic market, that we have exported for rupees 90. And that 90 rupees is represented by this 8 lakh 10,000. So considering the normal sales value, what would be the sales? It is 9 lakhs of rupees. So the total comes to 27 lakhs. Now what will happen? 18 lakhs out of 27 lakhs. With that, say we can compute the proportion. The proportion is 2 by 3 and the proportion is 1 by 3. Total is 1. It means that the 2/3 of our sales is in the domestic market and 1/3 of the sales is in the export market in terms of the quantity. I hope that you are able to understand it. Whatever the units that we have produced, out of that, 2/3 has been sold in the domestic market and 1/3 has been exported. Cost. Cash cost of the sales is 22 lakh 72,500. So here it is 22 lakh 72,500. So please use your calculator. 22 lakh 72,500 divided by 3. That comes to 7 lakh 57,500 into 2, 15 lakh 15,000. What does it mean? It means that we have incurred cost of 15 lakh 15,000 for selling goods to the domestic customers, and we have incurred a cost of 7 lakh 57,500 for selling goods to, that is say, the outside, that is for the purpose of export sales. Now how to make the calculation of data, let us understand. Dear students, as per the information given to our domestic customers, we are offering a credit period of 1 month. So what will happen? We understand that say it is 15.15 lakh divided by 12 into 1. That is the way we'll make the computation of the value of the data in respect of our domestic business. So it is 15 lakh 15,000 divided by 12. It comes to 126250. And the cost that we have incurred for exporting the goods is 7 lakh 57,500 divided by 12 months into, we understand that said for the purpose of export we offer a credit period of 3 months. 757,500 divided by 3, so divided by 4, it comes to 1,89,375 plus 126,250. So overall data is 3,15,625. That is how the amount of the data is calculated. So it is 3,15,625. For that, say we can write over here refer working note. One more clarification that I want to give you is this. See, once you make the computation of this proportion 2 by 3 and 1 by 3, what you can do working like this also. It is 2 by 3 and 1 by 3. We understand that say to domestic customers we offer a credit period of 1 month, and for export we offer a credit period of 3 months. So it is into 3 months. So based on this, you can compute the weighted average, and weighted average is 1, 2 by 3 months. What you can do, you can compute the weighted average like the collection period. After that, listen carefully, 22,72,500 divided by 12 months into 1, 2 by 3 months. That is the way we can compute the value of the debtors. 22,72,500 into 1 2/3 divided by 12, and it comes to exactly 3,15,625. This is also the way you can do answer if you want. So finally, 56250 plus 1,65,000 plus 315,625 plus 175, 126, 28125, 1,12,500 is to be deducted. 22,500 to be deducted. 78750 minus 1,68,000. So the working capital requirement before margin for contingencies is 4,84,250. Then 10%, 48425. With that, so we'll make the calculation. So over here 484,250 plus 48425. So 5,32,675. This is the way working capital requirement is found. Let us have understanding of the summary of the entire answer. In step number 1, cash cost of the sales is calculated, in which we understand, so the way we do normally, that is the way we are required to work out the answer. Step number 2, working capital requirement. In that, everything is simple. There are only two important things. One is the debtors calculation, and the second is the cash and bank. For the debtors, we are required to find out, say, what is the proportion in which we have sold the goods in terms of the cost for our export and for our domestic business. Accordingly, we make the computation of the debtors value. Remaining all the working are exactly the way we understand, and accordingly we are required to work out the answer.